With mortgage rates taking a dip lately, I don't know about you, but it's got me thinking about all that equity I've built, you know? It's tempting to say the least. Everyone and their cousin seems to be talking about cash-out refinancing these days, and it makes sense, right? But before we get ahead of ourselves, we're taking a deep dive into a podcast episode that really made me think twice, called The Cash-Out Refinance Dilemma. It's a call for caution, to put it mildly, and I think it's worth unpacking their arguments.
Absolutely. I think approaching any major financial decision like this requires a good dose of caution, for sure. What we're seeing right now in the market, it's a pretty unique situation. There are definitely some very appealing factors at play, but, there's always another side of the coin.
Right. Exactly. I mean, the podcast episode really lays out the allure of cash right off the bat. And honestly, it's hard not to get swept up. Low mortgage rates combined with the fact that home values have gone up so much for so many hello equity. It's like suddenly that chunk of cash feels tantalizingly close.
Yeah, and it's that accessibility, I think, that's making cash-out refinancing so attractive, especially now. It used to be all about lowering those monthly payments, but now it's about potentially getting your hands on some serious funds to, chase other goals. But that's really where understanding the mechanics of refinancing becomes so crucial. What you're essentially doing when you refinance is taking out a whole new mortgage on your home, and it's often for a larger amount than your original loan. You use those funds to pay off the old mortgage, of course, and then you pocket the difference.
And that, my friend, is what has everyone so excited, that difference. But of course, like the podcast episode is saying, it's not all sunshine and rainbows. You get that nice big chunk of change, but you also get the responsibility of managing a whole lot more debt.
You hit the nail on the head, and that's precisely where I think you have to proceed with caution. Don't get me wrong, a cash-out refinance can be an incredibly valuable tool, strategically speaking, but only when it's used wisely. It's all about, truly understanding both the upsides and the potential downsides before you even think about taking the leap.
Yeah, the podcast really got into the whole risk versus reward thing, even mentioning the F word, which, it made me a little uneasy, to be honest. So I have to ask, in this market, with things the way they are right now, how worried should people really be about foreclosure if they're thinking about a cash-out refi?
Foreclosure is definitely something to be aware of. It should never be taken lightly. I mean, you're right. Nobody wants to even think about that. But in the current market, while foreclosure rates are they're relatively low historically,
right,
there are some predictions. Some analysts are saying they could bump up a bit as we head into next year.
Okay. So not a surge, but maybe something to keep an eye on.
Exactly. I think perspective is key here. It's crucial to remember that foreclosure is, it's a last resort, really. Lenders, for the most part, they don't want to foreclose. They would much rather work with a homeowner to find a solution if things get a little rocky.
That's good to hear, definitely. I felt like the podcast host was in a similar headspace, actually. They shared this whole story, kind of personal anecdote about how they had been all gung-ho on this cash-out refinance plan, They were going to buy high and then wait for rates to drop, refinance, boom. But now that rates have actually fallen, they're like, whoa, hold on a minute. Suddenly that extra debt doesn't look quite so appealing, even though it was all part of the plan.
It's funny how that works. I think that really highlights the human side of financial decisions, which we don't talk about enough. On paper, it's one thing. But when you're actually faced with that reality, the weight of a larger debt, that potential risk, even if you think you've got it all calculated, it can definitely give you pause.
Totally. And the podcast, they didn't stop there. They laid out a bunch of reasons why, even with these crazy low rates, now might not be the smartest time to cash out. Like, one thing they were saying is, counting on real estate to keep going up, like it has been, to offset that bigger debt, that's a risky game to play.
And they're not wrong. I mean, I don't think anyone can argue with that. While real estate it's historically been a pretty solid long-term investment, there's no way to guarantee that this recent tear, this appreciation, that's going to last forever.
Right. What goes up must come down, or at least level off.
Right, exactly. And some analysts, I've even seen some predictions saying that we might see things cool down a little in the coming year.
Interesting. They also made a really good point about, life happening, like having that financial cushion for unexpected stuff and how cashing out might leave you a little more vulnerable.
Well, I absolutely couldn't agree more. That's something I think a lot of people, they don't really factor in when they're, weighing these big financial decisions. You lose your job, suddenly you have medical bills, or even something like a major home repair.
Yeah.
bam, there goes your carefully crafted budget. Having that emergency fund, that safety net, and managing your debt wisely, that's just good financial hygiene no matter what the market is doing.
For sure, for sure. So if cashing out is maybe not the smartest move, what did they recommend instead? What are the alternatives?
Well, they were big proponents of the tried and true methods, building a solid emergency fund, for one. They even talked about like saving up for a down payment on a future property the old-fashioned way. Remember that? Putting money aside little by little.
Ah, yes. The slow and steady wins the race approach. Kind of refreshing to hear, honestly.
Right. It all comes down to like really figuring out what your goals are, how much risk you're comfortable with. For some people, holding on to that equity, maybe looking at other assets, other ways to invest, that makes the most sense. And then for others, maybe a cash out refinance is a risk they're willing to take. It's all very personal.
Totally. I keep coming back to that it's not one size fits all. But I have to say, the part that really got me thinking was this whole concept of trapped equity, which, I don't know, it always sounded kind of negative, but they spun it in a way that made me see it differently. Like maybe not constantly tapping into your home equity can actually be a good thing, a source of peace of mind.
I thought that was interesting too, because it's true. For a lot of people, your home it's more than just, dollars and cents. It's security, it's stability.
Yeah.
Knowing you've got that foundation and not feeling like you're constantly having to leverage it to get ahead, it can be incredibly freeing.
Mm.
And I think, it speaks to the psychological aspect of money, which is often overlooked.
It's funny how we often overlook that feeling of security, like maybe true peace of mind comes from having that solid foundation, not from constantly chasing bigger and better.
It's so true. And, the podcast even touched on that, how it's easy to get so caught up in, the numbers game, home equity, interest rates, potential returns.
Yeah.
Like maybe there's more to life than just squeezing every last penny out of our homes, right?
Exactly. It's about finding that balance.
They almost had this like philosophical bent to it, like encouraging us to think about what really brings us joy, what makes us feel secure. And it's not always, something a cash out refi can buy. The time with loved ones, pursuing passions, giving back, those are things that, those are priceless.
Absolutely. Those are the things that truly matter. It's about recognizing that true wealth, it's about more than just your financial portfolio.
I love that. So it feels like this whole deep dive, this whole conversation, it really boils down to, it wasn't so much don't cash out ever. It was more like think long and hard before you do.
Exactly. They want people to really understand why they're doing it, what the potential downsides are, and, to explore other options, see if there are other paths to reach those financial goals. Because like we've been saying, a cash out refi, it can be a really useful tool, but it shouldn't be a snap decision.
Not something you jump into blindly, that's for sure. So to wrap things up for everyone listening, I think the big takeaway here is if you're even toying with the idea of a cash out refi, don't just listen to a podcast, even this one. Do your homework, talk to a financial advisor, someone you trust, and maybe most importantly, take a good hard look in the mirror, What are your goals? What's your comfort level with risk? And what really matters to you at the end of the day? It's those answers, those are going to tell you whether a cash out refi is the right move or not. There's no magic formula. It's all about finding what works for you.